Good morning, everybody. Welcome to today's morning coffee with Mike. Got the coffee right here. Today, we're talking about what to do when your strategy stops working. We've all experienced this, right? No strategy works 100% of the time. It's one of the questions that came up during the Trading Mind Wheel virtual conference. If you haven't watched that conference yet, the whole thing, all 8 hours, is up on YouTube. So go check out the YouTube channel, YouTube/Mara Wealth. It's on there. So, how do you, or what do you do when your strategy stops working? First thing to do is to understand that no strategy is going to work for all the time, right? There's different cycles to the market, and your strategy will work great in some, not so great in others. A lot of people are learning this the hard way. That just started out trading in 2020 during COVID, right? You closed your eyes, you threw a dart, and you hit a winning stock or a winning crypto trade, right? Then all of a sudden in uh, 22 and for a good chunk of 23, a lot of what worked back in 2020, 2021 hasn't worked as well. So what do when your strategy stops working? Well, there's three things that you could do when your strategy stops working. Um, and well, we'll go through each of them. The first is find another strategy. That's the popular one. The second is sit and wait, and the third is apply a strategy to other asset classes. Let's go through each one of them. So, what happens when most people have a strategy and it's working well for them, and then all of a sudden it stops working? They'll go and they'll jump ship and try to find some other strategy. So uh, it would be akin to you are a growth trader. You trade breakouts. There's a lot of momentum. Then all of a sudden, the market takes a bath, and you decide, you know what? I'm going to become a value investor, right? And so you're trying to uh, change strategies in that way, so that way you're constantly winning. The problem with that kind of mentality is that you end up becoming a jack of all trades, a master of none. Um, it's you can find other strategies that are working right now, the flavor of the day, but those strategies tend to stop. Those strategies will stop working eventually too. And so while you're busy trying to master one thing and that one thing is hot, by the time that you finally gain mastery in that other strategy, it starts to go out of favor. And the one that you originally had starts to come back in favor. That's the big problem, well, with changing from one strategy to another to another to another. It's you're far better off mastering one strategy and going with either uh, number two or number three, either sitting and waiting or applying a strategy to different asset classes. So here's how that goes. Uh, your strategy is working. You're making a lot of money, and then all of a sudden your strategy stops working. So what do? You can sit and wait. You could sit and wait and develop what my friend Mark Minervini calls it sit out power. Now, there's a couple of different ways to think about sitting and waiting. Um, and there's also how do you how can you get a heads up? How do you know when the market is starting to roll over, that your strategy is not going to work well anymore? And how can you figure out when it's time to start to get back in? Right. Well, we want to get out when our equity curve is up here, avoid the drawdown, and then get back in at the right time, right? Yeah, I see the little flames coming up over here on Instagram. You guys over here on Facebook, LinkedIn, YouTube, Twitter, let me know if you're feeling the same way. So, well, what you want to do, right? And this is what I do. It's called progressive exposure, or progressive exposure is part of what you want to be doing. So here's how it works. You start out by putting in a small position, right? You start out with small positions and you wait for your small positions to start to gain some traction. When your small positions start to gain some traction and you've taken some money off the table, then you're using those profits to start to lever up, right? So now you're trading bigger, but you're trading bigger because you're using the profits that you already made, right? So it's not like you're using your starting capital, you're using the profits that you made to finance the additional risk. Those work, and then you start to level up too. Um, you don't do this to infinity and you don't go all in with your account. That's not what I'm saying. What I am saying, though, is that you want to be trading bigger as the market is showing that your strategy is working and that you're right. You want to be trading smaller when the market is going against you and you're starting to have loss after loss after loss. The market moves in trends. Uh, it's true for stocks, it's true for crypto, it's true for pretty much everything that trades. There's going to be trends. So because there's trends, that means that your strategy will have a bulk of winners during one period and a bulk of losers during another period. Uh, hey, Arthur. I see Arthur over there on LinkedIn. Arthur was one of our former clients. Welcome, Arthur. So yeah, so Arthur knows very well. When your strategy is working well, you want to be levered up well when it's working well, and you want to start to scale off when it's not. So how can we start to figure that out? Part of it is by doing what I just said with the position sizing, by allowing your positions to help to give you insight on how the market is actually doing. Another way to do it is to figure out how are you going to gauge market health, right? Or how are you going to gauge what I like to call market mood? I like to look at it in a couple of different ways. And you could take this same methodology and apply it to other asset classes too. You just need to figure out, well, what metrics do you want to look at? So here are the metrics that I look at for stocks. I like to first look at the stocks themselves. So the stocks in my portfolio, like we already discussed, but I'm also keeping a close eye on the stocks on my watch list. So I'll make a watch list every week and I'll update the list throughout the week. And I'll see how is the market treating stocks that are setting up. Is the market giving me high quality setups or is it giving me a bunch of trash? Right? And if the stocks on the watch list start to break out and run, then that's telling me that, hey, it's a good time to be invested and to be buying. Great. If the stocks on my watch list are they're all taking a bath, then I know that it's not a great time to be invested. And so I'll continue to monitor that. Uh, Another metric that I like to look at is the number of stocks making new highs versus new lows. If you think about it, if you're trading stocks, if the major indexes, right, your S&P 500, Nasdaq, Russell 2000, New York Stock Exchange, and Dow, if they're going to keep on climbing higher, the stocks within them need to make new highs, right? Or they also need to stop making new lows. If the stocks within the major indexes keep on making new lows and you see new lows outpacing new highs, it's like, trying to run a race, but you have a parachute on your back, right? There's going to be all that resistance stopping you from outperforming. So I like to pay attention to the number of new highs versus new lows being made for that reason. Another thing to look at too are the major indexes themselves. Are they in uptrends? Are they moving sideways? Are they in downtrends? Are they moving together or are they kind of jumbled? Those kind of things lead to choppiness. They lead to trends, both up and down. What's the overall level of volatility? Taking into account all those things can give us a great gauge of market health, and it could help us figure out, well, is it a good time to be leveraging up, or is it a good time to be backing off? Uh, for the past year and a half, it's been a time to back off as far as my primary strategy goes. So you could kind of get a sense too of how long some of these trends can last. Um, then there's the third option, right? So there was the sit and wait option. Just spoke about that. Now we know how and when to uh, be able to sit and wait. But what about this third option? What about applying your strategy to other asset classes? And this can work well depending on your strategy. So the strategy that I use, I'm looking primarily at price action and looking for consolidations. If you're familiar with Mark Minervini's work and the volatility contraction pattern, those are the kinds of things that I'm looking for. I'm looking for basically like your wide and loose price action that starts to move sideways, and then it starts to price action starts to contract and contract and contract, and it forms this very tight area where if it does break out, then your risk is capped. But if it breaks out and fails, then you didn't risk all that much. That's the basic, about as basic as I can make it in a 20-second statement. Mm, So, uh, what I noticed is that that strategy works well, of course, on the swing trading basis. So I'm looking at daily charts and weekly charts, but it also works well with day trading. It also works well in the land of crypto. Great. So now, not only do I have other ways to apply my strategy, I could apply it for different time frames and I could apply it for different asset classes. So if the swing trading isn't working right now, if I'm not finding a lot of trades and I wanted to try to uh, find other ways to trade my strategy, I could look for the same kind of setups in crypto. I could look for the same kind of setups on the 30-minute time frame, on the 5-minute time frame, and start to give myself more opportunities to trade the same strategy, and it can work out very well. So that's how I go about uh, figuring out, well, what to do when your strategy stops working. The main thing is to not trade that strategy when it's not working. Right? If you find yourself stuck in the mud, the last thing that you want to do is to keep on spinning your wheels. You want to get yourself out of the mud, right? So stop, wait, stop trading that system. Identify when it's a good time to be trading that system, and you can also find ways to apply that same system to other asset classes. So that's basically it. Well, let's see what questions came in. Let's see what questions came in. Yeah, you guys over on LinkedIn and YouTube and everywhere else, type in your questions. Let me know what you guys have, and I'll scroll over here on Instagram and see what came in. By the way, if you guys are in the New York area, I'll be doing a book signing at Barnes and Noble Massapequa on Saturday, Saturday, April 15th at 3 p.m. So if you're in the New York area and you want to come by, I'd love to meet you in person. Let's see. Question: what is the best broker to work with, especially with people from Africa? Uh, I if the my favorite international broker is Interactive Brokers. They're based in the US. I don't know if they are available in Africa. You need to check. But that's the first one that I like to recommend when looking for international brokers. Let's see what else. And the reason why too has to do with their order execution and their flexibility. So what I mean by flexibility is that you can place different order types. So you can, uh, aside from your basic buy stop limit orders and those kind of things, like you could set up your one cancels the other order. So you could set up orders where you can uh, have your take profit at different levels, sell all that. You could set up all of your stops ahead of time. Basically, set up your orders so that way you could put them with the broker and then be able to walk away. That's what I like. Yeah, I prefer not to be in front of the screens all day. At least not in front of the screens looking at charts all day long. Interactive Brokers allows you to do that. So if you have access to them, that's what I would use. US, Canada, I prefer Thinkorswim. Uh, Question about leverage. Which is the best leverage to use? I personally don't like using margin unless if I'm already on a winning streak. So here's what I mean. If I'm on a winning streak and I keep on putting on more trades, and they continue to win, I'll go on margin because there's more trades that I want to put on, more A-level trades that I'm seeing, but I've already used my full cash allocation. So that's when I'll start to use margin. I'm not going to use margin to just lever up on in any scenario. I want the market to prove that my strategy is working, just like we spoke about before with progressive exposure. I want to be building on my wins, and if I continue to see more high quality setups, then that's the time to use margin. We want to use margin when we're winning, not when we're losing, and certainly not to try to dig ourselves out of a hole. See what other questions you guys have. That was a great question about margin. Any other questions? I'll stay on here for another minute or two if you guys have more questions on here. Answer the broker question. How long do you think we need to test a strategy? It's more about having enough data points for your test. So, uh, and here's how I like to go about testing too. And there's a whole chapter about testing in my new book, The Trading Mind Wheel. So the way that we should start out with testing is to actually go to factor modeling first. Now, what's factor modeling? Factor modeling is taking a look at what already works and trying to dissect it and figure out, well, how does this work? Like, none of us need to cook something up from scratch. We just need to observe what's already working and then figure out, well, how does this thing work? Uh, Even going back to the days of Nicholas Darvis, Jesse Livermore, when they were trading, they would find out, well, here's what's causing stocks to move and go up. Uh, what's the common factors among those? And well, what Darvis started to find out was that they would form patterns and there would be huge volume pushing these stocks up, and that there was certain fundamental characteristics with earnings and sales and things like that that would help boost the stock. Uh, William O'Neill later on built on that work too. So it's a matter of figuring out what drives the stocks and what drives the setup or the test that you're looking at. So start there. Start with factor modeling. Then once you've done your factor modeling, then move on to back testing. And with back testing, I like to look at 100 trades. All right. So some people might say that, oh, well, you need to have 1,000 or so trades to really have a robust back test. Uh, I think that if you've done the factor modeling, that you could go with less of a back test. And the back test that I like to use would be more of a manual back test versus something where you're putting it into software and having it spit out results for you. Factor modeling, you're figuring out a lot of what already works, and then the back testing, the manual back testing is used being able to get your hands dirty and see how this thing actually works bar by bar by bar. And so that kind of back test uh, can move a little bit slower. It's more granular, but because you've already laid the foundation with your factor modeling, it actually can move fairly quickly. So 100 trades for a back test. And it's 100 trades if you find that the back test is working well, this manual back test. So let's say that you get 20 trades deep, 30 trades deep, and you're like, man, I'm just this isn't working well for me, then I wouldn't go all the way to 100, right? Because if after 20, 30 trades, you'll already know if this thing kind of sucks and you don't want to do it anymore. Great, then take it, toss it aside, and now you know you've got something that doesn't work well for you, and you could move on to the next thing. If you get to 20, 30 and you're like, wow, this is the best thing since sliced bread, then awesome. Continue to the 100 because at that point, then you'll start to have more of a robust test and you could have some statistical significance when you get to 100 and go beyond 100 too. That's how I would go about doing the back test in a nutshell. But there's a lot more information about it in the book, The Trading Mind Wheel. Go grab it. It's on Amazon, Walmart, Target, all those places. Barnes and Noble. Any other questions? Bay Street Rapper, no questions, just like all your posts. Thanks a lot. Appreciate that, my friend. Uh, what is your view on SMC trading, if I may ask? I'm not sure what SMC is. Um, is that a ticker symbol? Well, what's SMC? Found SMCI, super microcomputer. There's a few international stocks with SMC. Well, what's SMC? Let me know what SMC is. Smart money trading. Who's the smart money? Are we the smart money? Am I the smart money? You're talking about the major institutions. We're talking about the major institutions, and that's basically what I'm looking for, right? I'm looking at the price and the volume, and the way that we could see how the major institutions are moving in and out is by looking at the price and the volume in conjunction with one another. The major institutions of the world, your major hedge funds, mutual funds, pension funds, they can't hide their buying and selling, and it's going to show up in these huge volume spikes that you'll see on the chart. So when a stock is in an uptrend and you see it consolidate and you see it break out and you see a breakout on massive volume that's two, three times the daily average, then you know that it's major institutions that are doing that buying. The reason why we want to follow the smart money or follow what the institutions are doing is because they can't do all their buying and selling in one shot like you and I can. We could enter and exit a position like that. For them, it's going to take several days, several weeks, sometimes even several months to get the number of shares that they want to get. And so that's why it pays to follow what they're doing. How do we follow what they're doing? Well, that's or how can we find the types of stocks that they're going to be interested in that will make these kinds of huge moves? It's a lot of what I talk about in the Trading Mind Wheel. So once again, go grab the Trading Mind Wheel. Amazon, Target, Barnes and Noble, Walmart, all these places. Go to tradingmindwheel.com. It's all on there. How much time does it take to learn the stock market? Uh, it really depends on if you have the right education, coaches, mentoring, how much time and effort you're willing to put in, how much focus you're willing to put in. Um, if you're if you're approaching it like school, right? Like a 4-year degree, then I think that most people, if they're applying that level of focus, if you're applying full time effort, like you are going and earning a degree, you could learn it in a couple of years. If you're putting in part time effort, if you're treating it more like a hobby, it'll take longer. If you haven't a clue and you're listening to somebody on TV casually and you pick up one book or magazine and you leaf through that and you think that that's research, then you're going to struggle. That was my attitude when I first started, and it took me 10 years until I finally got around other people that knew what they were doing and were able to coach me, and I started to take things seriously, and then inside a year I became profitable. So it a lot of it has to do with you, and are you getting the right kind of education? Do you have the right mindset? And do you have a blueprint to follow? That really is the big reason why I wrote the Trading Mind Wheel, to give you the kind of blueprint that you need in order to be successful in trading. Well, one of the things that I saw over and over again, and after I started to get serious and read all these different books, is that uh, there were different skill sets that were needed for trading. So some people would go heavy into analysis. Some people would go heavy into risk management. Some people would go heavy into mindset. Uh, a handful of people talked about back testing and forward testing and factor modeling, those kinds of things. I wanted to put something together in one spot that would teach you the different skill sets that are needed for success, but to also give you the mindsets that are related to all of it. And that's why I wrote the Trading Mind Wheel. Let's see. Well, what other questions are there? Any last minute questions? We are coming up to the end here. Talking Hindi? Sorry, I don't know Hindi yet, but I know a lot of you are tuning in from India, and it's definitely on one of my places to visit. All right, so it looks like that's it for questions. So hopefully, I'll see a lot of you on Saturday at the book signing. Again, if you're in the New York area, it's at Barnes and Noble in Massapequa. I posted a link. I'll put the link also in my bio, but I'll post the link to that, and let me know if you're interested. Yeah, if you're listening to this and you're interested, send me a message. Or whether you're watching over here on Instagram, if you're over on YouTube, Twitter, Facebook, LinkedIn, send me a message, and that way I'll make sure that you get the invitation. That's probably the best way to do it at this point. That's it for now. Great chatting with you as always, and I'll see you right back here tomorrow, 9:30 a.m. Eastern, for the next Morning Coffee with Mike. Take care. Much love. Peace out, everybody.